Good morning and welcome to the Early Bird, and here we're looking at the US dollar index, and this is a daily chart, and I just wanted to point out a few things here. The line coming across here, this dotted line here, is the 61.8 retracement level from this point to that point there. We'd counted 5 waves up through there, so we should see a 61.8 retracement level coming back through here. The actual index is a little bit higher than the futures contract. The 74.50 here is practically the 61.8 retracement level. So a breaching of this here and also a breaching of this trend line through here, if that's going to be the case, then that would be a collapse in the US dollar area here, and what that would do would in turn give gold a higher push up through the 1550 and also the indices as well, the Dow Jones and so forth. So it is important that we allow this to play out until this point here and the trend line through here. But I just wanted to bring you in on the bigger picture here, because we have been working this wave count down through here, and I thought it was time that we can look at this. Now, the other side to this is that we can view this here up for wave 1 here, and then we can view this as an A and a B wave and a C wave in 5 waves here, the 1, 2, 3, 4, 5. So the C wave would, well, it should be in 5 waves, but I would imagine that it would stay firstly above the 74 here. Normally a C wave would come down lower than this, but because this wave structure came quite high here and compared to this high here, then it doesn't really have the need to, it's a sign of strength, and it doesn't have the need to come back below this here. But normally what the case is that it would sit on the trend line here. So we'd look for a 5-wave structure sort of crammed in here as the C wave through here, and then a push up from there. So you can see that we need to find some sort of catalyst when we're looking currently now at the Dow Jones and our local market and the Asian market as well. So just moving onto that, because also the reason I'm pointing this out here for too is because of the euro and the Australian dollar. The euro will be doing the mirror opposite to this, but the euro will also follow the S&P 500. Okay, so they'll sort of merge in there. So with the S&P 500 here, just wanted to point out the account that we've had on the S&P 500 is this larger pattern here. This is the daily chart here, and what's made us feel about this situation, about this whole situation here being a corrective wave, and we haven't been proven wrong just yet. So labeling it as a wave 4 flat here, it's certainly a possibility, and it's a possibility simply because that this particular structure here is in 3 waves. So that's a corrective wave. So it could only be a B wave there. So we would look at this in terms of an A wave down to here in 3 waves, a B wave in 3 waves, and then 5 waves in this section through here. Now we've already had this rally to this point, and we've already moved down here. We haven't moved as low as this, but we've moved down through here. So looking on the 4-hour chart here, because once this correction's finished here, then we'll be pushing to the upside. So we have done that, and we have come back into this sort of point here. So, you know, pretty much with this correction could be finished at this point here, and this is why when we're looking at the S&P 500 yesterday on this situation here, we'd label this up for wave 1 and back for wave 2, and looking to go up to wave 3 here. So but we've also labeled an A and a B, because it can be an ABC rally going up, and this is what we got to work out at the moment, because, you know, we're in a bear market in the US anyway, and yeah, well, we just got to see what you know, if that bear market's going to continue, and this particular move up through here, is it going to be an impulse wave or a corrective wave. So on the S&P 500, if it was a corrective wave, we would look at it going to about 1320. So when we have a look at that, on breaking that down on a smaller chart here, we'd be looking at it like this, and this is how we would see the corrective aspect of it. And the corrective aspect of it would be a wave 1, 2, 3, 4, and 5. This will take us up to around this area here, and then fail from there. So as it checks on, it will have problems when it gets here. It will have the normal sort of corrective pattern across here, but once complete, push up. But after that, finding the retest there, and that would sort of leave the Dow Jones at 12,500 area there. And the reason that we feel that it's going to push up a little bit from here is simply because of the wave structure here. We can see that we've got wave 1, wave 2, wave 3, wave 4, and wave 5 in here. So we've got that first impulse wave there for wave 1, and then we've got this second impulse wave coming in through here as well, which is still unfolding and will continue to unfold. So there will be problems here, but eventually after a corrective process will push up. But that doesn't leave us any better off, actually, you know, in terms of actually understanding this here, because that 5 waves that I was talking about up here can be the wave C. So it can be the A, the B, and the C wave up to wherever it goes up there. Okay, but it also can be the start of the bull market up, in terms of up for 1, back for 2, and up for 3. So the wave that we're seeing here is actually a wave 3 happening here. Yeah. And then we'll have a wave 4 and then a wave 5. So that's the same as the Dow Jones here as well. So I've got this labeled here as an A wave to here, in terms of an A and a B and a C, for an A wave to here, a B wave to here, and then a C wave moving up through there, and still likely more to go there, because the C wave would be the 1, the 2, the 3 was probably here, so we'll get the 4 here, and then a 5 up to the C wave here. So looking around, we've always had the 12.3 as a possibility there, top of minor group 1, 100, 200, and 300, group 1. It can push above that, but will it find support on that? If it builds a robust support on that, then we can look to go to 12.5. So we don't know if this move is a rally, or is it a beginning of a next sort of much larger wave structure to the upside. We just don't know. So in terms of trading, I think what we can do is we can consider it a rally, a corrective rally, but we should also, in terms of being a trader, we should be looking to reduce any short positions and scale in on the strongest stocks that we can find on the long side there. So we can kind of balance things up and try and find the middle of the road without being long and short at this stage. Because when we look at some of the Asian markets here, just before we come onto our own here, just to sort of get a bit of a picture, because we're sort of, you know, we're in that boat there. So this is the Shanghai market here. So basically what we're looking at here, if we're looking at a bull market here, we're basically saying to ourselves that this wave structure down to this A, this B, and this C here, that could be labelled a little bit differently than that, but just for the purposes of that, we'll look at it as a 3-wave structure. I prefer to call things A, B, and C rather than W, X, Y, but anyway, that's something else. So what we're saying here is that low there can possibly be the low of the bear market, and we can be pushing up and making new highs above here. So that's a possibility. The other possibility is that, as mentioned on the S&P 500 and the Dow, that we could just be experiencing a little rally. We know that you know, a little rally like this, and then would be heading back down again, especially on the Dow Jones side of things. So when we're looking at the Dow, the support for this market actually down here is 2,500, if that's going to be the case. But when we're looking at the Dow, bear with me here. Right, so with the Dow here, we're looking at the minor levels here, we're looking at a simplistic sort of rally. The 61.8 retracement level from this high here, from this point here, would be the 12,300. That's where that comes from. But we also know that that this area here would be where the supply comes in through here. But we know that the market price is at 12.2 at the moment. We know that every 100 points there would be resistance there. So it's our job to work out what sort of structure that we're going to be looking at to the upside. Are we going to see, if we see a clear five waves like this, then what will occur after that would be a 3-wave swing here, and then another 5 waves up, and this would be the sort of start of a bull market. That's the sort of pattern there. Otherwise, the pattern that we're dealing with from this point here to say the 12.3 here would be, I'll just remove these here, would be a 3-wave pattern, and that's what we're counting just then. So it would be like that, and what the internal structure of that would be 5 waves here, 3 waves here, and 5 waves here that we're looking at. So at the moment we're sort of in here, we'll be looking at that there. So that's kind of what we would be looking at. So it can fail, from this region here, but we'll see how we go. So yeah, look, the markets are really oversold. We're seeing a rally. We just don't know what that particular structure is at this point. Then okay, that's great in terms of analysis, Pete, but what about trading? And then in terms of trading, I think that coming into our market here, we need to look at pretty much keeping it pretty simplistic, really. This is our market here, and just turning on the minor levels here. While the market is above 4,500 here, then we need to consider it positive, and we can take our trades from that point. So once again, we're looking at this particular structure moving up through here, and when we're looking at that on a smaller point of view here, okay, this will do. This is futures contract here. So yesterday we were looking at 5 waves moving up through here. We drew this little sort of pattern out through here that would hit this and then would come back. So that's 5 waves within there. Find support in subgroup 2 here for wave 2, and now we're moving up into wave 3 and so forth up here. The futures market here, the cash market would still be trading down here. So once the cash market opens, then obviously this will jump up through here. So if you're trading the SPY, you need to deal with, or you want support on the midpoint, the 50 here. So group 1 is 10, 20 and 30, midpoint 50, then group 2 65, 72 and the 80. So you'd be dealing with this, but you'd be gunning for the 4, 6 there. But once again, we're looking for a clear 5-wave structure to the upside through there. I've labelled this as an A and a B and a C here, in line with the Dow Jones and S&P 500 and so forth, but we could certainly wipe that out quite quickly, and then start, once we get this 5 waves in here, I'll just draw this out because this is interesting. So from this low point here, okay, I'll need to do it on this chart here. From this low point here, if we we'll get this anyway. That's what we're basically going to get. We're going to get that. So then after we get that, then we'd be looking at 3 waves back like this here. So once we get that 3 waves back, if this wave structure comes in through here and it turns into 5 waves like that, then we're back into the bear market again. So that's what we're going to be looking at. So hopefully, I think that we'll get this 5 here, we'll get this 3 here, and then we'll be looking for another 5 up like this here. So I think we can go searching for some longs, but we just can't overdo it. And the 4,500 is the line in the sand. And with our banking sector, as long as CBA is above 50, that will pretty much secure the low in for the finance sector. We're not seeing a lot of movement in material sector. Didn't really move a lot last night in terms of just bear with me there. So this is just looking at copper here, my sort of guide stick here. This pattern across here still appears corrective to me. We've just got overlapping wave structures. I don't want to go into it, but the bottom line is, as always, is that while it's above the 400 here, then that's the medium level for it. The market is supported, and what you'd be looking for is BHP to find support above 90. Now, BHP is above 90, but it hasn't retested it as support yet, so it hasn't checked it. Yeah, so yeah, just understand that just because the market trades above a level, it doesn't mean that it's safe. It needs to recheck it and check it and then move off from that point. And BHP in the US hasn't done that just yet, but that is a positive for the materials sector. Being above 90 and also being above here is fine as well. When we come to oil, this is the actual contract here. Been looking at the continuation pattern. I just want to have a market. Just want to have a look at this one here. But basically, you know, we had our wave count coming down to 90, and that was fine. We knew that we're in group one here. That would be looking for a bounce off this here, and we're looking at the structure coming up through here. Now, oil will pretty much sort of follow stock within reason. It can wander off and do its own thing. Our retest off the 90 or from the low here was the 95, so that's come into play there. That's a supply level through there, basically sellers sitting there, so that's going to get hammered there. So what we're looking at this point here now is that we feel that if stock is going to move up, then we could consider this an A wave up to this point. We consider this a B wave down to this point here, finding support on top of minor group 1, 2, and 3, but in 90, 192, 93. So if we find support here, then that's fine. And then we'll look for another 5-wave structure up through here. And 96.50 would be the sub-level that would be looking for there. There is an overhead trend line coming through there. But let's just see how we go. This is a little bit scruffy to sort of work out. That's why I had a look at this particular futures contract rather than the continuation pattern, because the continuation contracts were a bit more messy than this. So it's a little bit sort of unclear. But the normal case is that if this market moves under 92 here within the group 1, yeah, so once you're in group 1 here of 93, 92 and 91, 92 is the midpoint here. So on a second retest coming down through here, if it locked under there, then it would be part of the 90 story, and then further weakness would come in through there. But while it's above here, then we can keep this in play here, and we'll just see how we go through here. But expecting sort of another move up there, so don't get trapped. But you knew that coming into minor group 1 here, that it's going to be rough. So we had a good trot coming down from 100. So just chill out at this particular point. The gold market. Bear with me here. I think I may have lost it. No, there we go. Okay. So as you know, the US dollar index is moving to the downside, and that gives a bit of scope for this to push to the upside. If you have a look at our daily chart on gold, we can see that we've still got another push to the upside. I know that's against the general story of things, same with the S&P 500 and so forth, but there you go. The reason that I felt this is going up through here is because of, I know it's messy, but because of this particular 3-wave structure coming through here as an A and a B and a C wave here, taking out this new high here. So there will be a reaction at the 1550 here. So we'll see a reaction. We'll probably find support at the last, where most of the volume was turned over here at 1540, if that's going to be the case. And yeah, so expect a corrective pattern across here in terms of a reaction here, back down, up through there, and then an ABC correction coming across there. But after that's completed, if we find support after the ABC correction across here, then we'll move up from that point there. And the target points up here, of course, would be the 1565, 72 and the 80. That will all be part of group 2, but finding on the midpoint here will take us up to 1600. But when we get up to 1600, if that's going to be the case, I don't have the levels there. The most important one, or the medium level, is actually at 1650 here. A bit odd. Yes, I know 16 will come into play, of course, but 1650 will carry more weight there. So yeah, so we're already above a medium level here, 1500. So that's a medium level. So is the 1650. So yeah, all sort of positive on that side there. Okay, gather my mind, sort of rabbiting on a little bit. So the FX markets. Okay, so just coming back in here and looking at, this is the DXY. Actually, the DXY is trading above the futures market is trading above the actual index. Actually, yeah, okay, so that's interesting. So we're looking for an ABC correction coming down through here, and we're looking for the 61.8 retracement level, which would be around the 74, 72 area here. We could expect this market to come into the 80 here, in this little sort of zone here, and then bounce back up through here. So we should expect the market to be around this little area here for a while, but we didn't get a bounce off the 75 here, so that means that the market is really quite weak at this point, and there'll be further downside there. But don't be alarmed if this does stick here. But while this market is under here, then we can have a better look at the euro. We can see that the euro is pushing up through here. The 144 is very important, where it is now, and also the 14450 is actually a 61.8 retracement level as well. So, but it's near this old high over here, so he's going to have to be a little bit careful there. The 144 is quite pivotal in the bigger picture for this market. And this is market close here, so it's a bit messy. But look, as the market starts to open up and wake up in Sydney, then if this market is going to push higher, then look for support not only on 144 here, but start the trading at 144.10. This is all subgroup 1, 10, 20 and 30. That's what they're there for, to scale in on. If you can find support on 10, then get your first position. If it moves up and finds support on the 30, on the 20 rather, terrific. Then take a fair bit of profit at the 30 here until that becomes support, because that's the top of group 1. If it finds support, then we can push up from that way there. Otherwise, the 2-hour robo and the 4-hour robo used with the trading levels should see you pretty safe there. The Australian market as well, just so we've had 5 waves up through here, we've had a move back, and now we're seeing a move up here. So we could pretty much say to ourselves that if we find a nice solid support on the 106, then we'll be moving up higher through there. So bringing the picture back into here. So it appears we've got a 5-way, no, 1, 2, 3, 4, 1, 2, 3, 4. Oh, it's a bit corrective, that move. However, this is also a corrective move through here as well, because of the overlapping wave structures, and it's really good when a market goes above the level and then comes back down and spends time below the level, because any move above the level here, so this is 110 here, so we could bring this down to, say, 105 in here. So support on the 105 would be the trigger to move to the upside, then adding on, looking for support on the 106.10, which is the first sub level, finding support on that to the upside there. So wait for support on the 105 first, and that will probably come in with the cash market opening there as well. So okay, just coming back to the indices, the S&P 500, we're looking at it in both ways, a corrective rally to the upside, and we'll be looking for 1, 2, 3, 4, 5. So we're going to see an ending and struggling at this point through here at the 1300 here. So just be aware of that, and the same with the Dow Jones as well. But will this 5-way structure here, once it finishes, have a correction and then move higher, is what we need to know. So it's going to take a session or two for this to unwind up here further, right? So that's going to, today's Wednesday, so Thursday, Friday. So we could look at Friday. If we get a strong closing on the Friday on our local market, then we can expect the Monday to be up, and then we'll have a more positive rally to the upside. But while our market's above 4,500, then we need to be looking at long positions, because the market is very well oversold and it can snap back reasonably quick. So we want to be on that run, and we don't want to get caught short. So any short positions we've got out there, we want to shorten up the stops today and within reason, and definitely reduce and have a look for some long positions there. So I'll get onto that, and also use the trade check if you need a hand. All right, good morning and good luck.